Welcome back. As investors around the world watch the race for the White House in the U.S. presidential election, coming, of course, in November, many are wondering what a Kamala Harris presidency would mean to the U.S. and global economies. Our next guest has got some thoughts on that very topic. Derek Holt is Vice President and Head of Capital Markets Economics at Bank of Nova Scotia. Derek, I've read some of your notes on this, and you begin this topic by telling people it's a big mistake to assume a Kamala Harris presidency would thwart all the risks of some of Donald Trump's most risky or extreme proposals. Talk to us about that.
Yes, that's in a nutshell what I'm arguing, that it's not meant to be at all an endorsement for Donald Trump. I think some of his policies are way out there, like tariffs and the fact that his plans probably are not funded well enough, and so there's further risk of inflaming the deficit and bond market pressures. But it's meant to balance the debate here in terms of not viewing Kamala Harris as being the exact antidote to the risks that Trump represents, because she represents her own risks. And so, for instance, on taxes, she has pledged that she would raise the corporate tax rate all over again. How much? We don't know. She once advocated reversing all of the cut to 21% back up to 35%. She also has supported estate taxes. She has supported a Tobin tax, a small tax on stock, bond, and derivatives transactions. How much of these things she would actually do in office remains to be seen, but she has aligned her tendencies with the far left of the Democrats in terms of Elizabeth Warren, AOC, Bernie Sanders, that end of the political spectrum. On spending, she campaigned on a $10 trillion climate package. She also has supported wiping out student debt, free college tuition, Medicare for all. Now, again, she's not going to do all of these things, but it shows her tendencies to gravitate toward big spending and big taxes. On regulations, she wants to restrict, if not roll back, fracking. She wants to restrict AI. So these points are not music to the ears of the traditional energy and the tech sectors, for example. I think she would be a risk to the banking sector. She's worn it as a badge of honor to go after them. At a minimum, she probably wouldn't pursue efforts to deregulate aspects of the banking system. And there's her climate point as well. In addition to that, I think she's probably an understated risk to trade policy. She wouldn't embrace Trump's craziest views on tariffs, but she voted against NAFTA 2.0. She voted against the Trans-Pacific Partnership, both of which were supported by Obama and Biden. And I think when we face the need to renew the NAFTA 3.0 deal by mid-2026, she could come back to emphasizing all the reasons why she opposed those earlier trade agreements in terms of environmental and labor restrictions. And that could be a risk to Canada, a bigger risk to Mexico on top of that. She has also supported greater strengths and support for unions in the United States, which is good in some respects to some people out there. It would be an additional risk in terms of business costs in this environment. And her stance on some geopolitical risks is a bit mixed. She's a strong supporter of Ukraine, but seems to waffle a little bit in terms of her support for Israel.
So there's a lot out there. Now, is it not reasonable, Derek, to believe, and are you not building it into some of your forecasting and modeling, that she is now almost the Democratic nominee and is almost certainly going to be the Democratic nominee? She could one day, before too long, be president. Is it not sensible to believe that she would change many of these positions, moderate many of them, mainstream many of them, to be much more mainstream policy proposals?
Perhaps, yes. For starters, we're not incorporating any candidates' platforms into our forecasts as of yet, and that's in part because we don't feel like we can call the election. It's roughly 50-50 in my books. It also matters with the shape of Congress, who gets the Senate, who gets the House going forward. And of course, you don't even need to win the popular vote in order to win the presidency in the United States. And that's what happened with Donald Trump in 2016. He did not win the popular vote. And so a lot of the polling and whatnot is of very limited value. We're relatively election agnostic. We'll incorporate it as we get closer, if not in the aftermath of the election. But my point here is that even though a long list of her tendencies when she was not in the hot seat not having to be the one signing the bills and making the decisions, probably wouldn't all see the light of day. It very dramatically reveals her tendencies. And I think that's where the value to this exercise comes in play. She's not, of course, going to do all of those things, but she's going to lean toward that end of the political spectrum in a way that I find is probably going to be market unfriendly.